Okay, so good evening, everyone, and welcome to Careers of Tomorrow. Thanks for joining in. Uh, Pretty late in the day, but that's how we manage when we have to invite people from the industry. So, to give you all a brief introduction, Careers of Tomorrow is an initiative by Amity University where we join hands with industry and bring in courses for emerging technologies, courses for future career paths. So these are courses by the industry, for the industry, in sync with what the industry needs down the line. And the programs, the courses have been, made by both academicians and industry professionals who have worked tirelessly for last few months to make these programs. So I have today with me Aditya Shankar. Aditya has been working in analytics domain in Southeast Asia in banking industry. He has in the past worked with BCG. He is currently working with PwC. While we were thinking, what topics or what next should we speak on, every fortnight we try and get people from the industry to interact with all of you. So what we realize is that banking is one domain. So you must have read across that analytics has been leveraged across the industry, healthcare, e-commerce, marketing. There are several use cases. But that one industry which we all know has been struggling, a lot of regulatory environment, a lot of problems in the industry. We have been reading about NPAs, thousands of crores of NPAs developing in the industry. Government has to, not exactly bail out, but come join in, jump in with recapitalization. So now banking is at a junction where they're looking into the future where growth is hard. They have to leverage whatever is at their disposal. Uh, Last 2 decades were the time when IT, digitization, core banking solutions is what brought the industry forward. Uh, Thousands and thousands of branches and operations across segments in banking were digitized. Now that's done. We bank online on apps. So what is the next wave? How can analytics be leveraged, and how can banking address the challenges they face? So we'll try and get what Aditya has been seeing, what his experiences are, and let's see what we can pick up and learn from Aditya's experience. Aditya, over to you.
All right, thank you, Karan. I think you just contributed to 50% of what I had to say. So thank you for the great opening. It is, but first of all, I would like to start by thanking Careers of Tomorrow at Amity Online for giving me this opportunity to speak to all of you. It's a great way to reconnect with aspiring data scientists, people who want to make a career in analytics, and of course, all of you who are interested in the financial services industry. It is a great industry to be working in the analytics space. It is at the turning point, really. There's lot of lot of opportunities as a financial services base. It is really as if I may say so. So there is very little that you have to do in terms of a heavy sales push or go like really prospecting for clients and try to do a hard sell for an analytics project to financial services clients. That's a great thing about being in analytics, and particularly the financial services domain. What I would like to touch upon, maybe in the next couple of maybe 20 minutes or so, or maybe half an hour. First, I would like to just go through the broad um, levers that analytics can create in terms of value across the entire banking spectrum. And then maybe I would like zero in on one particular type of banking let's say, because there are a lot of services in banking, of course, as some of us will know who are interested in financial services. And I would like to just talk a little bit about private banking, wealth management, asset management in general, in which we are typically dealing with high net worth, ultra high net worth individuals, institutional clients who typically invest on an average a couple of $100 million and to, of course, billions of dollars of their assets to these financial institutions in the hope that they will grow these assets for them. So, very quickly, I would like to start with um, how advanced analytics can really help in generating an increase in profits, let's say, for the bank, because that's what we are eventually looking for, something which is creating value in terms of dollars and not just, let's say, moral support, for example. So, McKinsey, I remember, had put this very succinctly, as they always do, in one of their fancy reports. So I will try to maybe borrow some of the thought from McKinsey, and then I would like to add on to what I have been seeing in the last few months, few years in Southeast Asia, in particularly in the financial services industry. So as we see it, there are three broad ways advanced analytics can create value in terms of dollar amounts. The first is you take the traditional the value levers that a bank or a financial institution has, and right now I'm talking about banks and financial institutions in general, without focusing on a particular type of financial institution. So the traditional levers of value, or P&L levers, if you may call it, would be, say, lending. Lending is a great way of creating money for the bank. Um, you also have your funds bank creates, in which it hopes to get a sizable amount from a lot of people and then invest it back into the markets and see them grow and take a certain percentage of the growth as profits. So these are some of the traditional value levers. What analytics can do in the first place is to boost or give a boost to these traditional levers. So what it can do in this space, particularly in boosting these traditional P&L levers, is to accelerate growth. That's one. Right? That can directly lead to a dollar value increase in terms of profits. They can also enhance productivity, like by simplifying some of the internal processes, and I'll talk about each of these at length. And they can also improve, say, risk control. So these are three areas within the traditional P&L levers of a bank where analytics can add value. So let's talk about each one of them. Right? Accelerating growth. Analytics can like we all know this, and we've seen this probably as data scientists and analytics professionals in the past, but it can really create a very detailed profile of customers. Like what we call nowadays as micro segments, or very popularly also known as segment of one, right? In which you are in a segment of your own. That's how deep an analytics segmentation can go nowadays with advent in technologies and algorithms. So we can actually create a cluster or a segment in which you are the only member, because we can uniquely identify you based on your behaviors with the bank, maybe your transactional behaviors, your trading patterns, kind of merchants you interact with using your credit cards, um, locations where you like to spend the most, all of this, right? Can create a very detailed profile of you, including your behaviors, which is extremely important these days because this is an era of personalization that we are living in. We are all wanting to hear and see and feel content that is extremely relevant and extremely specific to us. And this allows really a financial institution to go after you, if I may use the term, very uniquely. So that's one. You can accelerate growth by creating extremely personalized content, products, messaging, uh, particular to each customer. And analytics, coupled with great advancements in technologies, is giving us this platform to take all of these customizations and personalization and deliver it to whatever platform you're using to interact with the bank. It could be a digital app, as Karan mentioned in his opening statement, or it could be a online browser that you're using, or it could even be that if you as you walk into the bank and you're talking to someone at the bank, and while you're talking, the guy who's responding to you may be a relationship manager or a wealth manager if you are a private banking customer with a net worth of more than $10 million. While you're talking to this relationship manager, he is already seeing what next message to put through to you to keep your interest with the bank. So this is very important. And it's quite understated. It's very hard to do, but we are seeing a lot of demand in this phase of accelerating growth using customer as the focal point of the business, and then using analytics and digital to drive that. The next bucket, the next sub point within the boosting of traditional levers of a financial institution is enhancing productivity. Um, Now, there's some of us who have worked with financial institutions before would appreciate the processes that are involved within the financial institution, be it a retail bank, be it an investment bank, be it an asset management bank, or any kind of bank. There is this whole lot of processes that are ongoing under the hood, which are abstracted from the customer, of course. But internally, or from an operations perspective, there is a whole lot of processes that a bank undergoes across the entire customer journey, right from onboarding a customer to creating a portfolio for him, or maybe a savings account or a current account or what have you in a retail context, to an actual portfolio in a wealth context, and then seeing the customer through all his life cycles within the bank. There is a wide range of processes that are involved in the bank, and all these processes stand to benefit greatly from advanced analytics. You know, any when I say advanced analytics, is any form of tool or analysis which will help them make decisions or help them aid them in making better decisions, right? That's what I'm talking about. So they stand to benefit a lot from this kind of advanced analytics. Couple that with things like intelligent process automation, and you see a lot of these processes simplifying tremendously. Um, a classic example would be a bank's ability to respond to a regulator request very quickly. Now, this is easier said than done because the regulatory requirement, as we all know, is changing almost every day, and it's very hard. It's becoming extremely hard for banks to really keep up with the regulators and their demands. Another good way of looking at things, another example which I can give you is transaction monitoring. How to figure out are fraudulent, given the millions and millions of transactions that a typical bank undergoes every day. Now, I have seen cases in which banks have to wait for up to 1.5 months to produce a detailed report on all the transactions happened in the previous month to actually table to the regulators or even consume it themselves, which is a huge time gap. I mean, really, can you actually take any remedial action 1.5 months later to when the fraudulent transaction actually happened? What value is it? It's already too late sometimes. And banks can face severe penalties in if they for their oversight. We have seen in our own lifetimes banks shutting down because of oversight. Banks paying hundreds and hundreds of millions of dollars in scandalous fees to the regulators, sometimes billions of dollars. Example, the LIBOR scandal in the UK in the mid 2000s, or the rogue trader scandal that we all know that UBS faced in the late 2010s, in which banks can end up sometimes spending billions of dollars. So it's of no use if your transaction monitoring report is coming out 1.5 months later and saying, oh, well, this is a transaction which was probably fraudulent. You need to have some kind of a real-time analytics going on, which says, based on the historical fraudulent data that we've had, we have some kind of an artificial intelligence, if you may call it that, or machine learning, if you may call it. I'm a little skeptical in using these terms these days because there's a lot of interpretation of these terms. But let's say advanced analytics. There's analytics which we can do on the past historical data, which can already start to classify properties of fraudulent transactions. Based on these properties, we can then start to real time maybe wet out some fraudulent transactions. So enhancing productivity is also of great value for the bank. The third one that we spoke about is improving risk controls. Now, the premise of banking is 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 that you look into the future and you say that, well, we hope that these events would occur, and then you start to play on those events, and then you make money or you lose money, right? Even a loan, for example, is a is an example of this. You give a loan to someone in the hope that he would pay you back with interest. If he does, then you make money. If he doesn't, then you have lost the money that you've given him, right? So it's a game of risk. And banks have invested millions and billions and sometimes billions of dollars, depending upon the size of the bank, to set up functions in risk, uh, primarily known as business risk organizations within many banks, in which they classify different kinds of risk, be it market risk, operational risk, credit risk. There's a whole lot of different categories of risk which they classify their exposure to. Now, what we are seeing is, and what we are constantly working with our clients to do is to lower their risk costs through analytics aided techniques. Things like digital credit assessment, or even things like advanced early warning systems, in which we can use all kinds of structured and unstructured data from all kinds of reports online, social media, etc., to give you an early warning of what might be coming. In terms, if I look at it very tactically, say for example, in terms of a stock going down, next generation stress testing of investments, of systems, and a whole lot of like credit collection analytics, right? In which we are trying to demographically segment who are those customers who are most likely to pay you back on time, for example. Right? You'd like most likely to go after those customers. Now, the expense of compliance and control, and this is all about compliance and control, has soared in recent years, right? And banks can use analytics to get all kinds of economic returns from their considerable investments. So this is another area in which analytics can really help. So what we have seen till now, we have said that there are three broad areas in which analytics can really add value. One of them is by boosting or fortifying a bank's traditional dollar value lever, or traditional money spinners, if I may call it. Just to recap, there are three kinds of traditional money spinners. One of them is accelerating growth by understanding your customers better, creating creating a segment of one segment per customer, behavioral segments. The second one is enhancing productivity by simplifying internal processes so that the banks become more agile in responding to changing regulatory environments, for example, or even more agile to find out what's going on internally in terms of fraudulent transactions, just as an example. The third one is to improve risk controls. We said the risk costs can be significantly lowered through analytics aided techniques like digital credit assessment or early warning systems, etc. So we're already starting to see some use cases here in which analytics can really help to unlock a lot of value for the bank, which is probably now just leaving on the table, as they say.
Okay.
The second, after the boosting of the traditional money spinners that we saw, the second category is that analytics can help find new sources of growth. Now, what do I mean by this? Right? Now, there's a whole lot of data that the bank is sitting on. For example, your card transaction. The conversations that we've been having with our clients in this region is to how to take that data and monetize it. Data monetization is a big topic these days, in which we're talking to clients across industries, not only banks, to take a stock of what data they have and come up with a strategy in which they can monetize the data itself to create a business based on the data they already have. So, would it be possible for them to share some custom analytics capabilities with new partners, such as telecom companies, who also have a lot of data, but don't have the data which banks have? For example, your spend data, where you spend most of your money. So all these strategies can now help find completely new sources of growth for the bank, something that the banks have not thought about in the past, which is also kind of enabled by data analytics. So at this point in time, maybe I take a small pause because I've been talking relentlessly for the past 10, 15 minutes.
So, I,
Karan, do we have any
yeah.
questions?
So Aditya, I think you have squeezed out the entire landscape for us to ponder upon. So I think I have a couple of questions, and before that, I ask that question, I'll uh, put in my view, and maybe then taper down that question. So
Yeah,
obviously, I'm sure all of this is easier said than done.
true.
Collecting data through 360-degree points, understanding where your customer is interacting with the systems, bringing everything together, and then bringing
Yeah.
building models. So, so I want to understand where on the entire analytics curve, where is the banking industry, uh, especially in India, because uh, have our bankers ready with the data and model, and they have to now start leveraging IT. So a lot of banking banks are still struggling with ensuring that the right data is present at the right place, and then if where they are on the curve, and then what kind of talent are they looking to hire from the market.
Right. So I think that's a good question. So it depends from of course bank to bank, and within banks also it depends upon which function of the bank you're particularly located. But in general, let's talk about an averaged approach, right? In general, what is happening is there's a huge need for a major data governance exercise to be created within large banks to standardize some of the key definitions or some of the big numbers, as they call it these days. As an example, if I tell you, you'd be surprised. I went to one of the Southeast Asian major banks and I asked five different employees how many customers you have, and I got five different answers. Right now, this clearly states that there is no standardized approach. There is obviously a need for a major data governance exercise to be done, in which some of the key definitions are well defined and known across the bank. Some of the source systems that we're talking about, which sometimes can be extremely siloed across different functions of the bank, they talk to each other. So there is a whole lot of enterprise data architecture work involved to understand whether, first of all, these systems are up to date. This is very important because what we are seeing is across banks, we are dealing with a lot of legacy systems. And banks, as we all know, are not very well, they are not very interested in changing because it's been working very well for them in the past. They've been traditional money spinners. And why would you kill a goose which lays golden eggs, right? So, but they have to change because the landscape in which they're operating is changing. So first of all, they need to realize check whether the systems, the technology is up to date. Once they realize that it's not up to date, they have to make it up to date. So there's a whole enterprise architect architecture angle to it, in which you establish the current state, establish it's not good enough, define a future state which will be good enough, tell their clients what good looks like, as they say, and then define a roadmap which will take you from A to B, from the current state to the future state. So there is also not only an enterprise architecture, there is also a technology strategist involved, right? Who can strategize the whole thing. So again, to just break and summarize what we've spoken about, we need a data governance expert who can standardize and define some of the stuff across the bank. We need an enterprise architect who can define and articulate the current state, articulate the disadvantages of the current state, and articulate what a future state should be. And we need a technology strategist who will take you from the current state to the future state. These three skills are definitely needed. Now, what is not immediately apparent from here, or visible from here, is where is the data scientist coming through? Right? The data scientist is at a level below this, in which he's using all of the outputs that these three guys are creating. Right? So the enterprise architecture and his team would create a single source of truth, as you said, of everything across the bank. And then it's the data scientist's job to take data that's there and analyze it. But let me just quickly touch upon the skills that a data scientist requires in the banking industry. Now, we all talk about technology, we all talk about data science algorithms, and I have done a lot of work with data science algorithms in the past few years, even academically publishing research papers or in the industry. And because of my work with all these great algorithms which everyone keeps talking about, it's kind of demystified things for me a little bit. I think the most important skill that a data scientist needs, along with all the technology skills, of course, is simply the skill to problem solve. Right? To take a problem, think analytically, break it down into smaller parts, which can be easier to handle, solve those smaller parts separately, and present a larger picture by integrating the outputs of these smaller parts. That is the real skill which a data scientist needs in a financial services institution, simply because of the scale of the problems that are being faced by the bank. Technology is an enabler. All the data science algorithms that you keep talking about are enablers. They can be taught. What cannot be taught, what has to come from within through a lot of hard work, a lot of reading, and a lot of simply experience, is your ability to break down problems and convert a very abstract business problem into an analytics requirement. Map the analytics requirement back to the data that you might require to solve that analytics problem. And then think about what analytical techniques would you use to get to the solution. Typically, you'll find that technology will not be a barrier these days. Analytics techniques will not be a barrier these days. What will be a barrier is your ability to map a business requirement to an analytics requirement, and then take the analytics requirement and map it to data requirements. Then map the data requirements to see what data is actually available to you, what data you can actually use, because not all of the data is usable. And then see, after the data mapping is done, what analytics techniques are suitable. This is the key skill, also known as analytics solutioning these days, right? Once you've done this, very rarely you will find that technology will play a problem. So I think I've touched upon a whole lot of skills that are very important to have, right from governance to architecture to strategy and data science.
And this was very insightful. As always, I'm sure not just in banking, technology is always a medium, is more often than not an enabler. And with the kind of complexity and magnitude banking brings in, it's imperative that a skill to analyze, break down problems, the approach, that's what matters before you start using your tools and technology. But Aditya, so as you also said, it's difficult to develop that skill set. You have to read a lot. You have to experience new problems. Technology can still be learned. Tools can still be learned. But still, having said that, what kind of tools do you see being used a lot? If someone from a technology background wants to start developing insights or start learning those tools, someone just asked, he already knows SAP BI.
Mhm.
What tools should he lay his hands on?
Okay, so basically, first steps, what does he want to do, right? There's a whole lot of roles that he can play in the whole data science world. Now, if he wants to be a data scientist, for example, someone who creates meaningful insights from data, if he already has SAP BI knowledge, that's great because he knows what, for example, ETL is, or he knows what industrial data systems look like, right? What he doesn't know is the statistical background of uh, taking those data and the hypotheses that you have while you've broken down that problem. How do you take these data points and create a meaningful insight out of it? So he definitely needs some kind of statistical background on what he can do with that data to create insights. He needs to be educated in the formal analytics methodology, which will open his eyes and his mind to what he can do to create those insights and how he can communicate it with the clients. Uh, and he also needs to have his hands dirty on some kind of statistical and analytical tool, right? Now, I'm not very specific, and I would not like to give you a specific answer because the specific answer will not be correct. I can guarantee you that. I will give you a generic answer. He should be educated in any one of the functional, statistical, or analytical languages. For example, R or SAS or Python. The choice is his. As long as he has his hands dirty on any of these analytical tools, one can easily adopt to the specific nature of the project because each project will be exposing you to a different tool, a different technique, a different technology. Right? So as long as he's aware of the fundamentals of what makes up a good analytics professional, I think he is good to go for any kind of project. So what are the fundamentals? I'll repeat myself again. The fundamentals are, of course, a good statistical background in which he will be taught the analytical methodology on how to take the data, which is seemingly meaningless as of now, but can be squeezed to produce insights. Uh, of course, he needs to have some kind of technical background. So what tools, maybe some functional programming language like R or SAS or Python, one of them, not many, and how to use these languages to use the statistical techniques he learned to produce insights. And also, again, understated is a creative, out of the box thinking and problem solving skills, which I continuously keep mentioning.
Fair enough. Fair enough, Aditya. Uh, so, any more questions? Do we have anything from the attendees? Okay. So, I think we can wrap up now. Uh, it was great listening to you. Great understanding where banking is, what banking can do. I hope banks in India quickly, are uh, on the road to implement whatever you have just talked about, and at least stop giving us pesky calls and they understand which audience wants, which customer wants, what kind of thing. I think I have one question. Okay, I'm still waiting. There's nothing as of now. So I think anything closing notes, anything you would like to uh, close down with to the attendees?
Um, no, I think it's a very exciting space to be in as of now. Uh, it is a field that will drive itself. There's a lot of regulatory changes that are happening in the West, which will have uh, which will have an impact on how we are looking at banks now, and how banks must prepare themselves to be future proof. So there is great opportunity here in the data analytics space. I think I just saw there was a question on GDPR. Was there a question on
Yes,
GDPR?
yes. So someone wants to know that, how might the industry change with GDPR coming into play?
No, that's a great point. I think GDPR is a very it's a game-changing regulation which was launched in the European Union, and I think it's already taken effect, of course, as of May 2018, and it'll really overhaul the way organizations handle personal data. It includes like lots of requirements and stuff, but there are basically, if you're not already very careful, then the banks that you're dealing with are obviously overly careful. Uh, they are obviously it comes down to basically very good data governance, right? Uh, Many banks are hiring data protection officers, whose job is to educate employees on GDPR compliance requirements, right? uh, and basically serve as a conduit, let's say, between a bank and the central bank, for example, to ensure that there are no breaches. But what specifically we are seeing is all data will be classified into which data points have client identifying properties. So the, the most obvious one is name, right? A name can immediately identify a client. So that's the most sensitive. The second one is maybe an internal ID which the bank uses, probably an account number, which not directly identifies the clients, but has a potential to indirectly identify the client. Now the third one is the more painful one, also known as a toxic combination in the words of GDPR and governance. Because if I for example, a date of birth individually cannot identify you, your gender individually cannot identify you, and your organization which you work for individually cannot identify you. But if I put all these three together, it becomes a toxic combination in which it can identify you. So GDPR has an obvious impact on the banks for it to be able to define all of these structures in which the personal data of a particular client is extremely well protected. So these are some of the this is some of the this is a very good example of what I was saying, that regulatory thinking in the West is going to impact regulatory thinking in the East, and banks need to make sure that they are absolutely future proof in terms of their internal processes, uh, technology, skill, people, etc.
Wonderful. Great. Thanks, Aditya. So I think we would close down here. So just wanted to add, we are we have started admissions for our PG diploma program in business analytics and intelligence. You can go down to our website careersoftomorrow.amityonline.com. Have a look at the program, download the brochure, read about the syllabus, the faculty. If you have any questions, you can come back to us, call us on the number, drop us an email, and someone from our admissions team would talk to you. Uh, Great, Aitya. Thanks a lot for your time, and
My pleasure, Karan. Anything for you, man.
thank you. Thanks everyone for dating. See you guys.